I'm here today with Gary Greenbaum, CEO of Syntonic Wireless. Gary, thanks for your time.
Hey Dave, my pleasure.
Can you tell us a little bit about the Syntonic business?
So the Syntonic business I started 3 years ago, almost to the day. I had a vision that today the data plan model didn't really map well into the value proposition for today's smartphones. And so we were really trying to change the model from data plans to connected content. And so we have two different products. One for the consumer, it's called Freeway by Syntonic. And there, the value proposition is that content sponsors will be providing free access to premium content to consumers. The other product we have is Syntonic DataFlex, and that is a product we sell into businesses. And what that does, it logically splits your smartphone into a business persona and a personal persona. The business persona the company pays for, the personal persona is you pay for, and it's private and secure from the business side of their smartphone.
How big is the market for a product such as yours?
Sure. Well, we have two different products. So for the consumer product, the Freeway by Syntonic, our target audience is the 2 billion consumers out there that are on prepaid data plans that ration their data use, where data is still relatively expensive in those regions compared to household income, so particularly in Latin America and Southeast Asia. For our Syntonic DataFlex product, our enterprise product, there we're looking at markets in US and parts of Europe where people use smartphones for work. And there the addressable audience, at least today, is around 330 million smartphones are being used for business, ramping up to about 500 million by 2020.
What are some of the recent milestones the business has been able to achieve?
Well, we're really proud to launch on AT&T last year. That was a big accomplishment for a small company. But what that has given us is the street credibility to launch on various other carriers. And so we announced a deal with Tata Communications earlier this year. And frankly, as a result of that, there's been an influx of other major carriers that want to participate with our platform service.
And what's the benefit for the telcos of using your platform?
Yeah, what's interesting right now with regard to the telcos is they're starting to see a flattening or a decline in their ARPU. That's their average revenue per user. And so most of the carriers are looking for new opportunities of real revenue as well as differentiation. You can't differentiate on a bit or a byte or a minute of calling, but you can differentiate on content and content offers. So what Syntonic provides is these incremental new revenue streams based on these content offers that the Syntonic provides.
And you're looking currently at an RTO on the ASX.
Correct.
What's the rationale behind that?
Well, we are considering Australia for a couple of reasons. As I mentioned, Tata Communications we did a partnership with them, and we're launching in Southeast Asia shortly. So we really wanted to have some sort of local office here, be in the time zones to deal with our partners for support and business development. But more importantly, we found just from an investment perspective that Asia is really a leader in mobile investment. And so we were going to come to the region, and we did a lot of assessment and evaluation of the RTO process, and we found that the economics were great for Syntonic as well as Pacific Ore shareholders who are going to be acquiring us.
Can you explain the details of your RTO?
So back in December, Pacific Ore, that's PSF on the Australian Stock Exchange, entered it into a conditional binding agreement to purchase Syntonic. After about 2 months, the market responded exceptionally well with that acquisition, and last month we were the 6th most actively traded stock on the ASX for technology stocks, that is. So really well uptake by the markets. We're going to be closing the transaction in middle of June, at which time Syntonic, my company, will assume management control of Pacific Ore. We'll rename the company Syntonic Limited, and it will assume all the business operations of Syntonic.
And in terms of the talent you've been able to attract both to your executive and your board, that seems a key differential for your company?
Yep, we really have a world-class strategic board, really spanned by presidents of major telecoms to presidents of major storage companies. I mean, it really is a world-class team that has supported us all along.
What milestones should investors look for in the coming 6 to 12 months?
Yeah, great question. First and foremost is revenue. And I'm proud to say, as an early stage company, one of the clear differentiators is, we have revenue, signed agreements, Tata Communications and others. So you're going to see sort of the influx of deal flow as a result, and that will translate into real revenue. And that is the reason why we lowered our capital raise. Initially it was for $7 million, and now we lowered it to the ASX minimum raise for re-quotation. We're seeking out about $1 million. And it's mainly because of this accelerated growth potential that we see.
Gary, thanks for your time.
My pleasure, Dave. Thank you.